Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is May 22nd, 2023. Trust you had a good weekend. I'm going to take a quick look at the dollar versus yen to start off this Monday morning in the U.S. So let's get started. Looking back at this chart, you have to go back to this part or day right here back on March 8th, I think, where the market came up to a high price of 137.91 and then started a rotation to the downside. It took until this point right here in early May where the price again moved up in toward this high reaching a high of 137.76, still 15 pips short of that high going back to March, but nevertheless sniffed that level before rotating back to the downside. And in trading last week, the price moved up to retest that area and then broke above the level, reaching a new high price of 138.74 for the calendar year before rotating back to the downside. And on Friday's trade, we closed right around the swing area between 137.76 and 137.91. So the market was setting itself up for something early this week. In the Asian session, the price did open up lower and started to move a little bit to the downside, but could not get below the low price from Friday's trade, and the price started to rebound back to the upside. What we see here is that the price did base against that swing area. I'm talking about this level right here, and that gave the go-ahead to push to the upside in the last bar, and a few minutes have allowed for the price to move higher. We have Fed's Bullard speaking, and his comments are fairly hawkish, saying that he expects another 50 basis points, that inflation isn't slowing, that if the Fed doesn't attack inflation, that it's going to be worse down the road, and so on and so forth. So his comments seem to be lifting the dollar yen a little bit more to the upside. We are seeing yields move marginally to the marginally higher in trading here today, although they're off their highest levels now. The 2-year is at 4.298%. It's still up about 1 basis point on the day. So seeing some rotation back to the upside. We're going to need to get above the high price from last week at 138.74 to increase that bullish bias. But this area right here is reestablished as a key support between 137.76 and 137.91. That is going to be the key barometer for this week. Trade above is more bullish, trade below is more bearish, so be aware, be prepared. Now let's take a look at the daily chart on the dollar versus yen, see where we stand from that perspective. When we go back all the way to the high price that we saw here in October of 2022 down to the low, the price in trading last week moved above the 38.2% retracement of that range. That's a minimum retracement that you want to see get taken out if the buyers are serious. And the price tried to get above it here, but fell off. And now we're seeing, 1, 2, 3, we're in the 4th day above that 38.2% retracement. So that's a good sign, and we'll see if the price can continue that bias to the upside. Also, we moved above the 200-day moving average of 137.43. Earlier in the month, the market moved above that level, and the next day it fell back below it. Going back to this time right here, the price moved above it, but could not. It looks like could not even close above the level before rotating to the downside. So again, that is more bullish for the dollar versus yen as well. This swing area is also being broken at 138.13 is the top price of that level, so that's more bullish. On the top side for the dollar versus yen, if the price is going to continue its run to the upside, the 50% retracement of this move from this high to this low would be the next key target, 139.57. I wouldn't be surprised if we head up toward that level. As long as these support levels can hold support, that's what we're looking for in trading this week. So there you have it, a look at the dollar versus yen. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.